Hey guys, so recently Swee Yong had came out with a video about his CPF series on what's he going to do with his CPF savings. Is he going to withdraw it? Is he going to put it in CPF Life? And after discussing with him on WhatsApp, we decided to maybe it's best for me to analyze a couple of the different options available and then come up with I wouldn't say my recommendations, but my point of view and how I see it, the different options here and there, and the different cash flows that it generates for retirement, right? So yeah, now let's begin. A couple of slides here. So of course, first one, disclaimer: this is not financial advice. It's just my opinion. Might be wrong. You should always speak to your own financial advisor to give you proper financial advice for your specific situation, because this is really general and it's just my own analysis might be wrong, right? So this is a short disclaimer. And yeah, so for the video, this is the video I'm talking about. I'll link it in the description below. But let's just...
We have invited Mr. Simon Chan, financial planner, a licensed financial
advice or comments is that I will just lay out what are the options out there.
So Swee Yong has been talking to Mr. Simon. I get he's a financial advisor, I'm guessing, and he's talking about the different options with regard to withdrawing your CPF and what insurance plans or annuity plans are out there to supplement your retirement income, and what's the pros and cons as well.
And then so that everyone can have a full picture in mind and make an informed decision.
So yeah, of course, pros and cons here. So I think this is very accurate, right, on the pros and cons, especially the scam point. As we get older, maybe our mental faculties aren't as sharp. Of course, a little more prone to scams. That being said, younger folks are also being scammed left and right. Got a couple of friends, in general, also got scammed. So everyone is vulnerable to something like this. CPF Life is higher payouts and earn the full 10 years of retirement interest. So I agree with all those points. I'll show it to you in the slides later on. And for the cons portion, no liquidity might be correct in certain cases where if you just need the money, like right now, if you lock in on CPF Life, I believe you can't withdraw it, but I'll show you another sort of a workaround or another option someone else can choose. But yeah, if you're 65 and it's in CPF Life, then it's only monthly withdrawals. But I've heard that if you have like a terminal illness or you have a total permanent disability, you might be able to withdraw a more substantial portion of the CPF amount, but I'm not entirely sure on that point. So okay, and then unable to earn potential higher returns, potentially right, policy risk, CPF Life, okay.
ERS. The next would be for those who have access, they will be transferred to the ordinary account.
Yeah. Yes.
This is automatic.
Yep, so this is the other option, leaving your money in the ordinary account instead of buying a policy or instead of putting it into your CPF Life at the age of 55. This will get you like a 2.5% additional interest per year, of course. And of course, the cons of investing is OA is restrictive on the CPF investment schemes, lower liquidity, and policy risk. For lower liquidity point, any excess that you put in your OA from 55 to 65, I believe you can withdraw it. Might take a little bit more time, but you can withdraw it. Okay. Okay, I'm just going to go through to options that he is saying. You can see you can view the video for all the pros and cons and what did he say about the different options here. And this is the policy that one of the policy options that he's illustrating. I'll break it down a little more detail, but this is the first one, and then there's a second one here as well. So in my comparison, I only compare option A because I think option B is not as comparable, because as you can see, the guarantee payout is only 2009 and the projected is 7.2 from year 3, right? So if you compare this amount to, for example, CPF Life payout for the same amount of premiums that you pay, it's quite a big of difference. So I think this option is for individuals or people who might need the payout that starts earlier at 58, and certain other benefits as well. You can view the entire video here, but I won't, just note that I won't be comparing this one here. Now I'm going to compare a little bit more. Basically, this is the ERS and the FRS. So for someone who is born in 1969, the FRS is $213,000 and the ERS is $436,000. And if I plug this into the CPF calculator, how much you get is, for FRS is $1,560 a month, and for ERS is $3,100 a month. So I think Simon is comparing the delta between ERS and FRS. So the additional 213 you top up to FRS, right? So I'll just be comparing that amount and how much additional monthly income or monthly distributions that will give you. So as you can see here, this is the the first option that I'm comparing against. So additional 213,000 on top of the FRS, which is basically the ERS. One thing to take note here is that you do put this 213,000 in at 55, and it's locked up for the rest of it, right? So you can't withdraw it, so there is no flexibility there in that sense. But at the same time, you do get the RA additional interest. I believe it's 4% to up to 6% a year. So from 55 to 65, you do get that 10 years worth of compounding interest. And then that's why at 65 years old, the CPF Life will draw down that entire amount there. And then it will give you a $18,480 per year payout. So every single year, for illustrative purposes, let's say this individual passed away at 85 years old, just so that we can benchmark everything at that point of time. So for age 65 all the way to 85, you get about $369,000 in terms of yearly payouts. And at the end, if you do die at 85, there's additional $95,000 of bequests. So basically, it's when you pass away, this amount is still remaining there, and then it will be bequeathed to your loved ones. So for this entire 20-year period of time, the 20-year distributions plus the additional death benefit will be $465,000 for the additional payout and the total bequestment. So one thing to take note where I got my numbers from. First one was, of course, I got it from the CPF Life calculator just to understand the amount of money that each individual will get for the different levels. But I believe CPF Life previously had a more in-depth calculator to show you how much bequest or how much, if you pass away, how much money you get, or how much money your dependents or loved ones will get at that point of time. But right now, I don't seem to be able to see it. So what I did was I saw Mr. Christopher Tan's, CEO of Providence, previous analysis of CPF Life, and that's how I got my numbers from. So it's rough numbers, but I believe it should be accurate. As you can see here, this is my projections for the entire 20 years. At the end of the death benefit, 95,000, and then if I do calculate this out, I'm calculating my IRR, which basically means what is my rate of return for the entire 55 to 85. It's just a number out there to quantify which policies might be better than others in terms of dollar return purposes. And because the bequest or the death benefit, I wasn't entirely sure the amount, and it was just a sort of like a guesstimate. I went also to look at Investment Mode's website, so if I'll link it in the description below. Really in-depth article that he did, comparing the different standard, basic, and escalating plan. All the illustration here I'm showing is more for the basic plan, because I think the basic plan might make more sense as a comparison here. So as you can see in the Investment Mode's IRR calculation here, internal rate of return here, at 85 is 3.92%, and mine is 3.85%. So I think it's roughly accurate for the death benefit portion for this comparison. So option 2, like what Simon previously said, is to keep the additional 213,000 in your OA instead. So this OA will continue to earn 2.5% interest a year. Additionally, this interest or this additional portion, you can withdraw it anytime, from my understanding, because you do have FRS inside your RA account already. So this one just continues to earn interest, and if you want to withdraw it, you just go through the same mechanism to withdraw the amount. And at the end of the day, once you put 213,000 in your OA, the interest earned for the next 10 years from 55 to 65 is $59,658. This equates to 272,000 at 65 years old. And I'm assuming that you put this $272,000 into CPF Life Basic again. To calculate that out, I just use the same calculator for a person that's going to retire next year, and calculate the amount that they receive, or additional amount that they receive, which is $1.3 thousand, as you can see here. So it's $1,370 a month of additional payout that you receive if you put this additional 272,000 into CPF Life Basic. So this is the illustration here. So at 55, you put 213,000 into OA. You get the 2.5% a year. You compound that at 65. Your CPF, your additional CPF Life amount will be $272,000. So at any period of time from 55 to 65, if you do want to withdraw that additional amount, I believe you are allowed to do so under the CPF scheme. So, but I'm assuming if you don't do that and you put everything else into CPF Life at 65, you get additional $16,440 per year. So that's for a 20-year distribution, that's $328,000, and the death benefit I'm estimating to be about $82,000 additional if you die at 85 for a basic plan. That gives us to a total payout of $411,579 for this number 2 option here. And now for last one is the insurance option that Mr. Simon showed us. Basically, it's just withdrawing $213,000 on when you're 55, and then buying this insurance annuity at that point of time, right? So some things to take note here. From 55 to 65, the guaranteed surrender value is still $213,000, so it's the same for the next 10 years. And if you do want to withdraw or surrender the policy, you can get back your the premiums that you paid, but of course you lose the interest component over there. But of course there's an additional 5% additional protection sum that they do give you for this insurance product. As you can see from the chart here, there's a guaranteed portion and a non-guaranteed portion for the monthly payout. It's around half of the amount is guaranteed, half is non-guaranteed, right? So this is also something to take note over here about this policy. So here's the illustration again for the payout for this insurance option. At 55 years old, you put everything 213,000 into the insurance policy or this annuity plan. At 65 years old, you have a payout of about $16,000. For a 20-year distribution, that will be $332,482. And if you do it with this person that we are illustrating dies at 85, there's an additional death benefit of $51,000 that will go to their loved ones. If you add both together, total payout will be $383,594. Okay, now I'm going to compare all three different options here. So first one, of course, the EHS, the additional $213,000 goes into the RA account at 55. CPF Flexi, which I call it, basically from 55 to 65, you put the $213,000 in your OA for flexibility in case you want to draw it down, but additionally you still get the 2.5% additional interest a year up until 65, and then at 65 you put everything else into CPF Life. Or the third option, which is at 55, you put it into your insurance policy from 55 to 65. If you want to do surrender it, you get back your the premiums that you paid, so $213,000, but you do lose the interest at that point of time. So these are the three different options. Of course, no surprise here, CPF Life wins in terms of additional, or in terms of payouts per year, because you do need to know that, of course, insurance policies, there are expense costs, there are agents costs, there's a lot of different costs that are embedded in the insurance option. But in CPF Life, it's sort of a government program, and there's sort of no sales costs, expenses, there's no insurance agent that you need to pay. So all these cost savings do add up. Additionally, there's the pooling effect of a lot of Singaporeans going into the system itself, and that's why it's projected to be a little bit higher. As you can see, for the first one, your total distributions that you get is $465,000. I would say the pros is you get a lot more in payouts. You get almost $2,000 more versus the other two options. And at the death benefit is also higher than the rest of the options, but you do lose a little bit of flexibility because you are locked up from 55 onwards, because everything goes into the RA account. It does gain interest and over there, but it's already factored in at the 65-year payout. For CPF Flexi, I call it, basically the thing you put in OA. From 55 to 65, you do still earn the OA interest of 2.5%, but you have the flexibility to withdraw it anytime between 55 to 65. So if you see that point of view, it's, I wouldn't say it's like a bank account, but it gives you the flexibility of in between the CPF Life option and the insurance option. But it does give you a little bit lower payout of $16,440 per year at age 65. And from 65 to 85, of course, you get the distributions there, and then there's the additional death benefit of $82,000. This versus the insurance option, of course, at 65 to 85, if you do need the cash for whatever reason, you can't actually get it out because it's in the CPF Life system already. But of course, that's the pros and cons of every single option here. For the insurance option, if you at 55, you draw down the $213,000, put it in the insurance plan. From 55 to 65, if you do need the money, then I believe you can surrender the policy and then get back the premiums you paid. So it's $213,000, but you of course lose the interest that you should gain from there. And at the payouts wise, it's $16,624 per year. So it's less than, of course, the option number one, but more than CPF option number 2, or CPF Flexi as I call it. It's about $200 more. But at the end of age 85, the bequest is only $51,000 versus $95,000 for option 1 and $82,000 for option 2. So here are the different options that I've compared. If you want a more detailed look on the different internal rate of returns for the more financially savvy guys, here are the different options. Option 1, 2, and 3. Of course, option 1, the IRR is a lot higher, 3.85%. Option 2 is 3.22%, and option 3 is 2.95%. So this is my analysis of it. Of course, each individual person, different circumstances, different outlook, and different needs and wants as well. So it really depends on what you see this CPF Life is for you. If for me personally, if I do retire at 55, right, and I do have substantial sum of money in CPF right now, I might think of doing the CPF Life Basic with the FRS. If I do see that I don't need the liquidity for the next 20-30 years, right? But if I do see a need for flexibility for the next 10 years, then yeah, maybe I'll go for option 2. And option 3, of course, if you need diversification, maybe it's good. Gives a little bit more flexibility when you reach 65 if you do want to get back the amount of money that you put in. But there's pros and cons for everything, right? It gives you a little bit more flexibility in that sense if you need the money at 65, 66, 67. But the bequest at the end, or the death benefit at the end, is a little bit lower than the two other options. So you need to play the pros and cons here. Additional thing to take note, I'm using CPF Basic plan for all the first two options. If you do need if for example you want the escalating plan, then the numbers are different. Escalating plan, basically, if I'm not mistaken, it's a ramp up thing. You at 65, you get a little bit lower than if you are at maybe like 80 years old, and then it slowly ramps up from there. And yeah, so these are the different options that they are, and my comparison of it. Wouldn't say that I have a recommendation here, just my opinion, as I said before. So yeah, let me know in the comment section if you have any other questions, or if you want me to break down in more detail for the different insurance options plan or the different CPF plans. Let me know, and I'll cover them in the next video.